the biggest job killer is? Hello, Market Club members everywhere. Happy Monday. Adam Hewison here, co-founder of Market Club, with your daily update for the major markets. You know, I've been thinking about this for a while, and I decided today was the perfect day to put in writing my thoughts on why I think the internet is a job killer and a job creator. Here are my reasons why. A relatively small number of staff can run a multi-billion-dollar company. For example, look at Facebook, who only has 3,000 employees. Compare that to General Motors, that actually makes things, and they have over 200,000 folks at work. Amazon, another name that's ubiquitous on the internet, has only 69,000 employees. Now compare that to traditional retailers that have millions of employees in the malls across the country, and you can quickly see why the internet is a job killer. The internet, which more and more Americans are turning to shop online because of its convenience, will be the demise of many more jobs in traditional shopping outlets. For example, Circuit City could not compete in the new world and quickly fell prey to the internet. Is Best Buy the next company to throw in the towel? Now take a look at Apple, the most valuable company in the world. How many people does Apple actually employ in the United States? Even with its retail outlets, Apple has less than 65,000 employees, Americans. However, in China, Apple, through a company called Foxconn, has over 400,000 Chinese working to make iPhones, iPads, and practically everything I for Apple. You can only wonder what kind of impact almost 500,000 manufacturing jobs would have in the U.S. Think of what that number of jobs could do for our economy. America has to rethink, reset, readjust, and retool if it's going to get serious about creating jobs in the new global/internet world. Countries, including the United States, cannot rely on past successes. History has provided us with many examples that a country, like a company, resting on its laurels, soon falls by the wayside. Okay, enough pontificating. Let's get to the markets and take a look at what's going on there right now. So here we are. We're looking at the S&P 500. We have a plus 90 score, meaning the trend is still positive. However, if you look at this market closely, you can see that really since about this date right here, and this is the 13th, we've been sort of going just sideways in this market. Just you can see this. So certainly this level right here, the 1470 to, I would say, 1480 level is definitely a resistance zone for this market. So watch that very carefully. On the downside, this is support. If we go through here, then I think we'll see some more pressure coming into this market. I'm a little disappointed that we haven't seen this market move higher. We do have a higher target zone for this, as you well know. We're looking at 1550. All our indicators are positive, but the market is just biding its time. This could well be an energy field that pushes prices higher. So again, sort of no clue on this market. We're sort of in the midpoint of the Williams percent R, but certainly we want to watch this market very closely so it doesn't reverse to the downside. So lots of reports and earnings coming out this week, so let's pay attention to that too. So here we go. Let's go to our next market. Now this again, before we do that, let me just scope this in a little closer because I want to really share with you. This is not a particularly positive sign. Right here, this line here is a doji, and frequently indicates reversals. Here's one like here, and you can see how the market reversed up, and this is a doji on the upside. So if we close down today, then I think probably we put in a top and we may see a pullback further than most people back to the 1430, 1435 level. So I think that's where the market could potentially come back if we close on the downside today. So let's watch that very, very carefully. So let's go to our next market. And the next market we're looking at is the Dow. Same thing there. The Dow looks a little bit heavy. Not quite so heavy, but it's just been a flat market. You can see, look at how this has just gone nowhere. And let's just scope it out just a little bit further, 3 months. But you can see it's just the same pattern, flat, 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 flat. But generally speaking, the trend is your friend, and you have to say the trend is up in this market and the S&P 500. Going to the NASDAQ. NASDAQ is not performing well because of, well, you guessed it, Apple. Apple's getting killed. There's been a strike at Foxconn apparently in China. They're developing some potential complaints on their iPhone, not just the maps, but also on the blue haze on the camera. So, and I don't think sales are as good as they want them to be. For example, I have a 4S. I'm not upgrading to the 5. I don't think it's worth the money. And my 4S does everything the 5 does. It just does it a little bit slower. And also, I'm not in an LTE area, so there's no advantage for me there. So let's see how this plays out. But generally speaking, if we were to see this market move below the this index, I should say, the 3,080 level, this would be, I think, more pressure coming into this market. So let's pay close attention to this market. So let's go to our next market. That's going to be crude oil. Crude oil, again, this is sort of bobbing up and down. Good support coming in around 88. You can see the PSAR is just continuing to go down, 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 down. A move over 92 is needed to get this market really rocking on the upside. It's not there yet, but we'll have to pay close attention to see how that plays out. Not much going on with the Williams percent R, flattening out on the MACD. If we were to see this market move through the blue line, go through the red line, I think that would be an early indication that we're going to go higher. So just as it happened here and the market came down, it would happen here. If we go through it, the market should go up. So let's see what happens. Longer term, our monthly trade triangle is still positive, and we still believe this market can go higher. So let's go to our next market. If you're an intermediate term trader, by the way, in crude oil, be out of the market for the time being. Here is a plus 100 reading on the euro dollar. Still very positive on this market despite today's pullback. I'm not sure what's going to propel it. Maybe an agreement in Europe, maybe no agreement. But the trend, basically, all of our trade triangles are positive. Looking for a move to 135 on this market. A lot of people aren't in this market, still negative on the market based on fundamentals, but the market's somehow telling you it wants to go higher. So let's move on to gold. Gold was under pressure today from its Friday close, and it's actually coming back, and it's currently trading around 1775. So again, the trend is your friend. The trend is clearly up both in the long-term monthly trade triangles and the intermediate term trade triangles. Only the daily is a little bit negative. So let's watch that carefully. We may see some more sideways action before we eventually see this market move over $2,000 an ounce. Moving along to copper. Copper is not putting in a particularly good performance. I think it's reflective of the economy and also the stock market that we're seeing, the things that's going on there. So I think this key level here, I think it's the 3, let me just make sure, it's the 3.68 key level there. When we go through there, then we're going to see a little more intermediate pressure, downside pressure. But let's see how that plays out. But generally speaking, you've got the weekly and the monthly positive, indicating that the trend is, in fact, on the upside. Silver. Silver came under pressure early today, checked again. The PSAR on this is 33.60 with 34.04, so it just managed to avoid it today as the low. Today was 33.73, just missed it by 13 points. So nonetheless, it's a very important level. Again, the 35 level is crucial for this market because it's got to go over there soon. Otherwise, it's going to perhaps roll over. But I'm guessing the upside is going to be the line of least resistance in this market. I'm not sure what's going to kick it off. Maybe it's the elections. Maybe it's the Middle East. Maybe it's something else we don't even know about right now. So let's go to our next market. This is Apple. Look at how Apple is performing. This is a terrible performance. Currently trading at 637. We talked about this last week. We had our intermediate term signal. We said to get out, exit Apple if you're an intermediate term trader. And that's proven to be a very accurate signal. And if we scope this out even further, let's go 6 months. And I think we can put our Fibonacci in here. And I think this is where we measured it from to down to this level here. And you can see we could so easily trade down to the 620 level, which is not that far from here, $17 for a stock priced at over $600 a share. But remember how everybody at $700, people say, oh, it's going to 1,000, it's going to 1,000. That's when the market becomes over enthusiastic on the upside. And I think that's the key thing to remember here. It's when everyone's in the same camp, usually the market reverses and goes the other way. So we're very oversold. The crossover certainly took place here, and the PSAR is still negative. So I would say, generally speaking, we're going to see more of a defensive action. And it could be because, one, the strike with Foxconn, two, they're not selling as many iPhone 5s as they first thought, and three, the potential problem with the camera with the blue haze. So all of those things are contributing to Apple being negative short term and intermediate term. Longer term, it's still positive. So let's just keep that in mind. Next market we're going to look at is the Hewlett-Packard. Again, this is not a good stock. Continues to be the fallout from the big drop that we saw last week, and continued through to today. This is on Wednesday. This is today. Again, this is a big 52-week low closing, so this would have worked very well with our rule, a 52-week rule. New lows on a Friday, 52-week lows get short. So this is going to continue. We've got obviously some major problems at HP, and we're very oversold. So again, I can't see anything that's going to turn this market around anytime soon. All of our indicators, if you look at our indicators, short from 25.02 longer term, currently trading at 14.55, big profits in every position we have here on this stock. So let's go to Facebook. We talked about this earlier. This is sort of meandering along, 3,000 employees, billion-dollar company, and it's really going nowhere right now. I know there's a new call for $16 on the downside. Not sure about that, but generally speaking, we've got mixed signals, minus 75, indicating that the trend is longer-term negative. In the intermediate term is a little bit positive, but nonetheless, it's just kind of like going nowhere. And I think that's the key to remember. We need to see some signals, either the monthly, certainly the monthly on the stock is going to be one of the keys. So let's just go back to our book and look at the last one, Amazon. We mentioned in our little editorial at the top of the hour. And let's just take a look at Amazon. Amazon continues to look like a juggernaut. Plus 100, all the trend is positive on this market. If we close, we move over this level here, which is right around the 264 level, then we're going to see another big push up, probably to the 280 level. So let's see how that plays out. Generally speaking, you can see how Amazon has just really done a great job, amazing job, when you think they just started selling books and now they sell everything. So here's the, let me just give you an upside target zone we have for Amazon, because I think the internet world is going to continue to dominate the retail space, and certainly Amazon is the big player in that. So let's just take this off the screen, take the triangles off, and I'm just going to draw some very quick lines on here so give you an idea of what we're looking at. So this clearly was a major area of resistance right here, and now it's support. So this was resistance, and now it is support. That's how support and resistance works. I think if we see this market, we can measure from, let's say, this level here down to this measure here. I'm just going to make this from 240 down to 170. That's approximately $70. So 240 plus 70. That would be a target zone for Amazon, $310. So let's see how that plays out, but I think the internet world is going to continue to decimate the retail world. So I'm Adam Hewison from MarketClub. I hope you're having a great trading day, and I really appreciate you taking the time to watch this short video. So every success. I'll be back tomorrow at the same time, same place.